All right, welcome back into Market Day Report. I'm Scott Shellady, otherwise known as the Cow Guy. Thanks for tuning us in. This is the last time we're going to do this on this show, but if you wait till the top of the hour here, which is only about 15 minutes away, 17 minutes actually, Cow Guy closed. We want to see you there too. We're getting it done. There's a lot going on. We got 3 great guests, and we've got a new guest this time who's the preeminent mind when it comes to high tech and AI. I've been trying to get him for a long time. I'm really excited to have him on the show, but we've got 3 great subjects as well. There's a lot going on out there in this world, anywhere from soybeans today to interest rates and equities. So you want to tune us in. And that's at 1 Central, 2 Eastern, at the top of this hour. How if you missed that for some crazy reason, we play the show again on the radio in late afternoon. It's 5 Central, 6 Eastern. That's Rural Radio, Sirius XM, channel 147. And if you're eating dinner or something like that and you can't make that one, we give you one more chance in the middle of the night. That's 2 a.m. Central, 3 a.m. Eastern. And that's, again, Sirius XM channel 147. That's the Cow Guy Close. We give you 2 places to listen, 1 place to watch. I think the watching is the best. And that's at the top of this hour in exactly this, 15 minutes and 50 seconds from right now. All right, let's get to these markets and see what we've got going on. Let's bring up a corn board. Now that I've gotten that out of the way, we've got a lower board in SEP by 5 3/4 cents to 377.5. A penny and a quarter off the lows there, well off the highs by, we can say about 8 cents, almost 7.5 cents. Look at the D new crops. That's down 4.5 cents to 397, even a penny and 3/4 off the low of the day there. All right, that's corn off anywhere between 4.5 to 5 3/4. We go to the beans. This is where most of the action's been, mostly all of it. SEP beans. Look at this, down 23 3/4 cents down to 947.5. A tick off the low of the day there. And we're working on about a 26 cent range there. That's what it looks like to me. No, the new crop, that's down 23 cents. The 963, and that too is just a half cent off the low of a decent range there too. So that's soybeans right now kind of backing up on their heels. Let's go to the Chicago wheat market. That's lower too, 6 1/4 cents lower in the front SEP. 530.5 is last there, 5.5 cents off the low of the day. Almost 8 cents off the highs. March, that's down 5 1/4 cents to 573 and a quarter. That's Chicago wheat. From Chicago wheat, go to the hard red. That's Kansas City. Front month's up a tick, right? 1/4 cent better. 548.5 is last there in the middle of that range. That range is about an 11 cent range. 548.5 is pretty much in the middle of it. We're 1 1/4 cents lower in March to 575 and a quarter. That's the hard red in Kansas. That's go to the spring wheat, right? Let's see. 2 3/4 cents better in that SEP contract to 595. And then we move out to March. That's 1 1/4 cents better to 629.5. So there you go. We're up anywhere between a penny to 2.5 cents when it comes to the spring wheat. We kind of like looking at that. Finally, let's go to the cotton. It's been down all day. 66 points lower there in that D's contract. That's the new crop. 68.41 is last, just 36 points off the low of the day. That's cotton for you. Again, 68.41 is last. All right, let's bring him in. It's Mr. Ted Seifried, Zaner Ag Hedge in Chicago. Ted, thanks for coming on. All right. I mean, the headlines are going to be beans. Have at it.
Yeah, absolutely, Scott. I mean, we're still just kind of dealing with the aftermath from yesterday's WASDE report, which, man, we are really now packing a whole lot of the production. We should start calling the August report the production report because of the new yield number that we're going to get every August, and now the new acreage number that we're going to get every August. And soybeans in particular are still dealing with the fallout there. In fact, I don't know, you could argue that beans should have been down 40 cents yesterday, but with the strength in corn, they were able to bounce off their lows. Now, as you said, soybeans are sort of having their way, really, extending lower and pulling corn down as well. Now, here's the thing about corn. We did have that key reversal yesterday, and as long as we hold 390, that key reversal is still intact on the corn chart. Now, whether we hold 390 or not, I don't know. It's a tough time of year to expect that, especially considering that there's still a lot of on-farm corn yet to move to market. And we've got a harvest coming up, which by all indications at the moment anyways, looks like it's going to be a very, very big crop. So a lot of that cash corn is going to have to move. There's still that selling pressure that's yet to hit the market. So I am worried that key reversal from the report day yesterday is going to be a bit of a head fake for corn. We'll see. But again, until we're below 390, it's still there. Now, for beans, the question everybody wants to know is how low are we going? And what I'm going to say is that, I think 880 is the number that's been throwing around. I think based on the report we saw yesterday, that's justified. Markets like to overshoot the mark on things, so I'm worried about that. But we also do have about 3 weeks of weather that is, super important for soybeans. And until we're done with that, I don't know. Do we just go straight lower from here? And I'm kind of hoping not. But obviously today is, saying otherwise for the moment.
Yeah. Well, I mean, that's what it looks like. I mean, yeah. Anything can change at any moment in time. But right now, looking at it, it's going to be a tough one. And when you have that many more acres and that big of a jump in yield, I mean, that's what you're going to get. I mean, there's no way around it. You can spin it any way you want. All right, stay right there. We're going to go away. We're going to pay some bills. We're going to come back and talk more. We're going to talk about the livestock when we come back. That's with Ted Seifried, Zaner MarketCast. He's in Chicago. We're in Nashville. We'll be right back. All right, let's take a quick peek at these livestock markets. That's what this segment's saved for. Let's bring in that livestock board. That's going to be live cattle. A little bit better here. October's up 45 cents, 180.47 last. We've had a $1.55 range. That's 40. Well, now we're 55 cents off the low of a $1.55 range. So that'll give you an idea where we sit. But as you go out the deferreds, we actually gain some real estate. A $1.50 higher in April. 181.72 is last there. Feeders, they're a little bit better too. September's up $2.37 to 241.87. We've had, about almost a $4 range, $3.50, and that's not bad. November is up $1.82 to 238.37. We like that, don't we? Let's take a look at lean hogs. Lean hogs, when it clicks over, when it does click over, there you go. Our October's down $1.35 to 72.97, and we're $1.35 lower in Feb to 68.25. All right, let's bring him back in. That's Ted Seifried, Zaner MarketCast. You got about a minute and a half if you can squeeze it in, Ted. All yours.
Okay, well, I'm going to make 2 quick points on soybeans, not to beat a dead horse here, but the biggest thing is that the soybean production increased by 155 million bushels, and the USDA only saw fit to increase demand, export demand. That was the only thing they could increase. They're stuck on the crush apparently by 25 million bushels. That's not their protocol. They would have liked to add more demand to the balance sheet, but for the fact that they couldn't do it, that's a problem. The other problem is that 2 years ago we had 100 million metric ton global carryover in soybeans. Now we're 135. That's an enormous jump in 2 years. So again, I just kind of want to drive those 2 things home. Now, livestock. Hey, we're bouncing off the lows. That looks pretty good. Look, you got a stock market that is rather strong today and up over some major resistance levels, acting like it might want to sort of go back to the trend that it was in. If that's the case, we feel a lot better about domestic demand for high-priced beef, but also, hogs, which were getting that sort of recessionary trade interest, are kind of losing their luster a little bit. Right. So it's sort of a double-edged sword for the livestock. But, the feeder cattle, which had that big outside reversal day, gave a lot of it back yesterday. The fact that they're hanging on here today and up, that's the one I think we need to watch. Live cattle didn't experience the same sort of thing, but looking pretty okay today. So I don't know, maybe we can have a recovery there too, but I think a lot of it hinges on what happens with the stock market going forward.
I agree. All right, great stuff as usual. Thank you very much, Ted. Ted Seifried, Zaner MarketCast, coming to us from Chicago. Bring it back here to Nashville. One more time, hand it back over to you, Suzanne.
Looking forward to Cow Guy Close, of course, coming up at the top of the hour. Make sense of all of this for us. Thank you, Scott.